Welcome back to the Wall Street Podcast.
Good to be here. Today we're diving into a detailed report from Morgan Stanley. It's titled Correction, AI Supply Chain, H20 Production, Android AI Phone, AI Factory Analysis Updates, and it came out just yesterday, August 26th, 2025.
Right.
And this deep dive, it really refines our understanding of the whole AI supply chain. We're talking chip dynamics, AI factory economics, and even the new AI smartphone market.
So our mission, as always, is to pull out the crucial insights for you, streamline things in these, well, pretty complex and fast-moving areas. Let's unpack it.
Okay.
Let's start with Nvidia's H20 chip. It feels like a bit of a geopolitical chess match, really. The report suggested Nvidia was looking to halt H20 production.
Because of China's crackdown on purchases.
That's the initial take, yes. And while Nvidia's CEO, Jensen Huang, did state they had U.S. government approval for sales and, insisted the H20 lacks security backdoors.
Well, our checks in Asia, they suggest that CoWoS packaging for the H20 has indeed been stocked. CoWoS is that key chip stacking tech. And server assembly apparently stopped weeks ago.
So the supply chain signals are pretty clear then.
They seem to be. It definitely highlights a critical market dynamic we need to watch.
But what's interesting, despite that halt, some Chinese customers are apparently looking at Nvidia's B40 chip now.
Exactly. It uses GDDR7 memory instead of the HBM, the high bandwidth memory, found in H20. And the demand estimates are significant, maybe 2 million units this year, potentially 5 million next year.
So it really shows the market adapting under pressure, doesn't it? Finding alternatives.
It does. And this whole H20 situation, it just underscores the geopolitical sensitivities, right? Nvidia says they constantly manage our supply chain to address market conditions, which is, well, standard language. But the pivot to chips like the B40 in China really signals this trend towards, let's call it strategic diversification. And interestingly, this whole dynamic actually positions TSMC, which Morgan Stanley rates overweight, as a really critical long-term growth driver for China's AI and GPU needs, despite these immediate challenges.
Okay, so from the individual chips, let's zoom out a bit. Let's talk about the AI factories, these massive operations running the models. The report refines the economics here.
Yes, based on feedback from companies and investors. A key update is bringing the mixture of experts, or MOE architecture, into the calculations for TPS tokens per second.
Right. MOE models like Llama 400B, they don't use the whole model all the time, do they?
Exactly. They typically activate only a fraction of their experts for any given task. That reduces the demand on memory and, crucially, networking.
I see.
The report also clarifies sparsity assumptions, which can apparently boost output by about 5% for some chips, like AMD's MI355X. And networking bandwidth is getting critical differentiation now. Well, AMD's MI355X uses their Infinity fabric, gets about a 20% boost to 154 gigabytes per second, which is good, but it still lags behind competitors like NVIDIA's NVLink.
Okay, so better efficiency, different bottlenecks emerging. What does this mean for the bottom line, for profitability?
The report gives a range now. It suggests that at a price of about US 30 cents per million tokens, most chips running that Llama 400B MOE model can actually turn a profit.
Even older chips?
Even the older generation AMD MI300, yeah. For a standard 100 megawatt AI factory, annual profits could range from, say, US $722 million up to US $1.36 billion. Depends heavily on that token price.
Of margins.
Pretty healthy. Average profit margins estimated between 52% and 68%. Though it has to be said, NVIDIA's GB200 NVL72 system continues to really dominate on pure performance metrics.
Right.
And this revised TCO framework, the total cost of ownership, considering these big 100 million factories, it really shows that at that 30-cent token price point, a wider range of processors become economically viable. It suggests, a more diversified market for AI inference hardware, still led by NVIDIA probably, but more players in the game.
Okay, that makes sense. Let's shift gears, though. Something maybe closer to home for many listeners, the AI smartphone. Is it finally arriving? The report seems hopeful about Google's Pixel 10.
It does. The Pixel 10 is powered by TSMC's 3-nanometer Tensor G5 chip, and it's integrating some pretty advanced AI features, things like Magic Q, Gemini for broader AI experiences.
And the translation feature.
Yes, real-time translation during calls using a natural voice. And apparently these features work across both Pixel and non-Pixel phones too.
That cross-platform aspect is key. So the big question the report raises is how quickly do these kinds of features spread, specifically to the China smartphone market? Could it trigger a replacement cycle, maybe in 2026?
That's the multi-billion-dollar question, isn't it? It suggests these aren't just niche features anymore. They could be real catalysts for a broader consumer tech upgrade wave, driven by genuinely useful practical AI. That on-device AI is a compelling upgrade.
It feels like a tangible shift, moving AI from maybe a novelty to something indispensable in your pocket.
Absolutely. And these advancements we're discussing, they connect directly to our daily lives, right?
Yeah.
Optimized AI factories mean faster, more personalized AI services online.
And the Pixel example, that real-time translation, that could genuinely make cross-cultural communication seamless for many people.
Precisely. It directly impacts how we interact globally.
And underpinning all this is just staggering growth in demand. China's token consumption apparently jumped 300x in 18 months. Google's tokens doubled in just 2 months.
The scale is immense. It means the AI capabilities we rely on are just getting exponentially more powerful, more accessible. And that drives innovation everywhere, from better online assistance to, potentially advanced medical diagnostics down the line.
So much potential.
So even with market corrections, these supply chain adjustments, like with the H20, the fundamental demand for AI just keeps accelerating. This deep dive really shows that the push for more efficient, powerful, and accessible AI is, well, relentless.
Which leaves us with a final thought, perhaps. As AI gets embedded deeper into our infrastructure, into our personal devices, are we just seeing an acceleration of existing digital trends, or is this the dawn of an entirely new economic era? Something for you to think about. The answer is likely going to shape investment strategies and, frankly, consumer behavior for years to come.